In this video, you're going to learn how to analyze the market as a day trader. We're going to go through the daily, the 4 hour, the 1 hour, the 15 minutes into the 5 to help you understand where all the levels are, all the pivots are, where the Fibonacci's are, what strategies to use, how to use them, how to understand the charts. The following video you're going to see is a session that I run, an internal training session with my guys. And it's an interactive session where they're asking questions and I'm showing them all the different levels. So if you really want to understand how to analyze a market as a day trader, watch this video. Put your comments in. I answer all queries, all questions, and I'd be interested to see what you think of this as a tutorial. Here's the video. So that's all the prop fund stuff out of the way. Right. I think we did. I'll turn the trades off. Don't want to get too excited about all the trades. Turn them off. Did say we were going to do, as Terry calls, some landscaping, helicopter view. So we're going to have a look at how to analyze a market from a day trader's perspective, starting at a 1-day view with all the support and resistances, and then we'll drop that down into 4 hours, and then 1 hour, and then 15 minutes, and then 5. We'll look at the support and resistance going through all the multi-time frames. Whilst going through the multi-time frames, we'll also do multi-time frame Fibonacci retraces and Fibonacci expansions to see if we can get any correlations. And what I mean by that is if we got sort of a 68.1 here on a 4 hour, and we get another 68.1 or a 78.6, something very close to it. So we get a cluster of real Fibonacci, multi-time frame Fibonacci's. That is a nice tight cluster. So no matter what time frame you're trading as a day trader, you will know that all the Fibbo boys, all the people who use Fibonacci's, are going to be in that cluster and they're going to be trading. And you need, as a day trader, you need to know where the Fibbo boys are actually going, either from retraces or through expansions. And we'll quickly pick on how to use an expansion tool and a retrace tool. And then while we're going down the time frame, we can pick out some of the trading strategies that we might want to use, which could be support and resistance. It could be 15-minute bars. It could be 15-minute fracks. It could be 5-minute breakouts. So it could be 5-minute fracks as well. And the rationale and reason why we're going to use those, and just for a heads up, it's going to be dependent on the impulsive moves in the market. So you can see this impulsive move here. If we look at this impulsive move here, we set the impulsive move marker here. It's the average true range. Use the ATR, and for day trading we set the ATR for 5. That's 5 days at the top end. The average true range is measured on days, or 5 units of anything that we do. So what we're actually saying here is, on average, the average true range in a daily move could be 40 pips on this asset, which is gold. So we could see it not beyond the wit of man on average for this market to move 40 pips today. And so that's what the ATR is, average true range. And that's an average true range over 5 days. We are day traders, so we don't need to have lots of smoothing for 10 days or 14 days. Doesn't do anything for a day trader. We're looking at impulsive moves within the day. So that's what we're looking at. We're looking at the average true range as well, to know that there's no point in going for a trade using a 15-minute bar. If our stop is going to be 45 pips, for instance, it has to be concurrent with the strategy we're using. So if we're using a 15-minute, and we're on 15-minute now, we'd want to put this down to roughly 15 minutes to see what the impulsive move might be. In other words, can we actually get a trade-off? And that's a spike from the Federal Reserve. So you're kind of looking, we want something, you zoom out, you can look in somewhere between 7, well, round about, it's been really, really low there, but on an impulsive moves, about 4 to 7 pips on a 15-minute bar. And if you are looking for a trade to be over and done with in one 15-minute bar, that is not really representative. So if you're going to do 5-minute trade, then you probably want 15 minutes, 15-minute impulsive move. If you're going to do a 15-minute bar, then you're probably going to want a 1 hour to 4 hour time frame to see if the 15-minute bar, when it is activated, has a hoping chance of being able to hit its target. So that's 12. This morning we set the market. What did we set the market? It was 18, wasn't it, to try and hit the target for today, which was a target. So we're looking here, the impulsive move is 27. So our target of 18, I put that at 19 just to be pedantic to get in there, but our target was 18 pips. Can we hit that as a day trader? Absolutely, yes, we can, because the impulsive move is telling us that the market will actually move in blocks of 4 hours or blocks of 1, the amount of pips that we want to actually get. So I can't emphasize enough before we get into this, the importance of understanding the impulsive moves in the market, which change depending which asset you're looking at. So it's no good having a target 40 pips away and you want to try and hit it in the day if you're in if you're on 5-minute charts, because the impulsive moves and the way the market moves up and down and retraces, it's just not conducive to using large targets. Ideally, you want a 1-to-1 risk reward. Right, so it was suggested we're going to use gold, but we can use anything. Are people happy with gold, or do you want to use a different asset? It doesn't matter in the slightest.
I don't
Everyone
mind.
happy?
Anyone's fine, yeah.
Everyone's happy with gold?
Yeah, happy with that. Yeah.
Okay, we'll use gold then. So let's get rid of all the drawings, first of all. How could we get rid of all the drawings? I'm on version 12 at the moment, so delete all drawn objects, dunk. Right, okay, so we've got nothing now. It's a blank canvas. So delete that. So what we'll do, we'll start off at 1 hour. 1 day, sorry, 1 day. So here we are on the 1 day. So quite interesting climb that really, isn't it? So what we do have, and we're using Pro Real Time, and you can do this on TradingView and probably lots of other platforms as well, is that you can identify by color coding market highs and lows, support and resistances. So here we use a silver, and that's for daily and weekly resistances. This is just to give you a key on what these colors mean. 4 hours are always in a gold color. Red are always 1 hours, and they can go lower, but lower shades. And red usually depicts a resistance area, and then we go for green, which usually depicts an hour support or below. We also have blue, which is a secondary or tertiary resistance. And what I mean by that is if we look at this chart here, and the market's run up and it's looks like it's, I'll just get rid of that alert. It looks like it's pulling back. So the first level at the daily would be a support level down here. And we'll talk about how to draw support levels, what size levels. But the basic guide is you want to use 3 points, 3 wicks to actually identify a depth of band, or 10 pips as a rough guideline of depth. You could use a 7.5% ATR as well. So that would be the first level of support market to bang down on. So the market's coming down, that's your first level, because that's the first point where the market had drawn up from and come down. But prior to that, there are other levels that have encroached on this rise, and they're called secondary or tertiary levels that you do want to mark up, because people are really interested in these bands and will often look to buy off these bands. So that's what the blue is for. It's for marking in secondary or tertiary watch outs. So if you don't understand where these levels might be going back from here, then you could be flying blind. You might use Fibonacci's, and we'll look at those in a minute, but that's what you'll be looking at. So that we'll draw that in at this very moment for the daily. Get rid of that, and we'll get rid of all drawn objects again, and draw them in. So at the very top, generally when you're at the very top here, you would not want to put a daily support, a daily resistance level in, because you have not come away from that yet to identify it as a resistance level. It's just pushing up. So at best you'd use 4 hour, but what we can do here is identify a level here. That is a very interesting daily bottom at 3,300. Now you've done, and this is me or us getting ready to do a trade as a day trader. So, at the moment we're all-time record highs, so we've got no reference to the left to actually draw in. And if you remind me at the end of the session, I'll put a reference in, maybe in the FTSE or the Dow or whatever it is you want me to do, to show you how to draw those in. So at the moment, we've only got a base. We'll drop into 4 hours. So rather than do it independently, I'm going to mix in the Fibonacci's. Okay. So this is a daily level. What we can do, just for interest, we're going to put a Fibo on that. It's not going to do anything for you as a day trader, because this is swing trading territory on a daily basis. But out of interest, when we're starting to mark this thing up, we want to know where the swing traders might be, because the market over time may pull back. So we take the very bottom, the lowest low, swing low, to the highest swing high here, uninterrupted. Now, having one, what we want to see ideally is one smooth set of green bars, or one smooth set of red bars going down. But having 1 bar interruption does not matter. We can still count that as a smooth run. So what I do have here is some predetermined Fibonacci marks to make life easy for me. So I can hit this one. This is a 61.8, and I just bring it down there, and I hit the 61.8. And it also marks the time frame that retrace is there. So I'll just right click and look at that configuration. So if we wanted a different configuration line, so it's got 61.8 in there, we can say, can we have another one, please? Plus, and I'll just call it, let's call it a 38.2 Fibo. So we'll call it 38.2, and we'll add that. You'll see it appears there. And we will type that in as a 38.2, 38.2. And then we'll save it. And now it's a 38.2 Fibo. So I bring that along, put it in my stack. So I know I've got 38, 61, and 78. So if I click that now, it'll automatically mark it on a daily basis there. Now, if you don't want the daily basis to be marked up, and there's no reason why you shouldn't, I would say absolutely have to, is that, yeah, that's the price time frame. Click that off and it disappears. So click that back on and it goes back on. So what we've done now is mark some key dailies, which is if the market's really, really bullish, we wouldn't expect the market to dip any more than 38.2. If we get a normal Fibonacci retrace, and the markets fall over, let's not get into why the markets might fall over, but if markets fall over, it'll get a big interest on a 61.8% Fibonacci. So what we can do is look at that. So now we've got that. Hold on a second. I need to change that. Have I not changed that correctly? 61.8. Sorry, I don't know what I did there. 61.8. Get that correct. Right. So at 61.8 and 38.2, we now can just mark in very quickly. This is where the resistance is starting on the 38.2, but we also can mark that right to our Fibonacci. So we know this is a real line of interest to swing traders. Let's get into the detail next, go at the 4 hour and start really drilling into the information on a 4 hour. So what we're looking for here is, first of all, our support and resistance lines. So we can put a 4 hour one up here now, because we're in the detail. We can just put a very small 4 hour one in there. And then we can see here, we're coming back a number of days. So to put a 4 hour resistance line in, you need to be, I would say, you need some rules of engagement when you're doing these. A 4 hour resistance line can only be put in if it's more than 1 day previous, because within your daily routine of moving up and down, they're all 1 hour impulsive moves or 4 hour impulsive moves, which may get overtaken by events throughout a trading day. So you need to go back at least 1 or 2 days and find where the market has found a place. And you can see here we've got an impulsive run down here, we've got a couple here and here and here, and really we want to be getting 3 wicks in really to cover where the markets may bottom off. So there's a bottom 1, 2, and that one there 3. So we've now got a bandwidth of where the market on 4 hours has actually rejected. What we have got as well here is another Fibonacci opportunity. Now, this move here was the Federal Reserve interest rate move. So that's an impulsive move that we don't count because that's on news and that's a spike and that's people's reactions. We look, this is the last swing low here up to there. The market came off, and that's an impulsive move. So we don't look at that. That's an economic news event. So when you're looking at doing support and resistances, being able to draw them up at a higher time frame is quite interesting, but at a lower time frame, they are just responses to the market news. So we don't need to have a look at those. So this is this area and time frame now, 4 hours, is of interest to a day trader, and this is where we can start looking at expansive moves and calculating expansive new moves with the Fibonacci tool. So first of all, we do a retrace. So we take the swing low here to the, that's an expansion tool, swing low to the swing high there, and now we can draw in our levels. So we've got 61 legs, it's already done it. But keep drawing them in. You put them in and then take them out at the end. What you want to do is get all your overlay of information so you're interested. And tips along the way are, if the market is very bullish, it's very rare that a 78.6 will not be, is broken. And what I mean by broken is a close under the 78.6. When you get a reaction like this, where the market comes down and then pushes back up, these generally are the Fibo boys, swing traders and even day traders, understanding that there's a Fibonacci sequence here. If you get a close under the 78.6, then normally the market will retrace at least 100%. So that's one of the things you need to actually note on a pad or stick it, put it on your screen. If the 70 at every time frame you are trading, so 4 hour, 1 hour, 15, 5 minutes, these sequences are traded by all different types of traders, day trade, swing traders, value traders, day traders, scalping traders, all different types of traders, all use a Fibos at different levels, and they're all targets. But at the 4 hour level, a rejection off here is something that is key. If we put our trades on, we waited for the rejection, we got stuck into the trade there. And as you can see on here, we've just hit our 1% target and we're going for just a little bit more, turn that back off. So the Fibo came down, we've got a retrace and we can see the daily and we can see the hour. So there's our Fibo. Now we've seen this, we've got a new higher high. That's a spike, so you don't need to be interested in that. Markets came down. It looks like it's rejecting, as you can see. Looks like it is rejecting. So we can run our first expansive move. So markets, as you know, are moving impulsive waves. I've got my drawing tool here. The markets only go up or down. They don't do anything else. And they're running waves. So you've got like a wave 1, wave 2, another wave 1, a wave 2 that hasn't broken the rule of making sure that when you're doing all these things, you are looking at higher lows and ideally higher highs. So this is wave 1, impulse wave 2, wave 1, wave 2, and you're looking for the next wave up here. Now, you've got to remember there's all these things in the way of that wave breaking through. Just to put that clear. So we're going to do an expansive move. So we use an expansion tool. We're going to go look at the last low up to that last, oh, it's the wrong tool, there's a tool. Last low to the last high, pulling that back to 0. And now we're looking at the next waves. So quite interesting here. If 50% is usually given, that's not a Fibonacci number. 50% is well respected in the industry of a retrace or an expansion. The expansion that people will be looking for, you'll see Fibo boys, and we might actually see this live while we're doing this, is that we have a 3681 with 8.5. So that is a 61%, not retrace. That's an expansion. So we'll try that in expansion. So that gives us the first expansion. We're going to have a good spell, wouldn't it? First expansion there. So we've got, there's a 38%. The 78% is where people would probably looking for taking money. And I'll just right click, copy that. Oh, it doesn't do the same as it. Copy horizontal line. Oh, flipping heck. Let's get copy. That's it, and take that up to 78. That'll be super accurate. Let's put that in because this is trend. So you know where the next level is probably the Fibo boys are going to be looking at. So you've got retrace levels pulling back, which is ignited the requirement for people to Fibo boys to get involved and to buy. You now know that the targets that they're going to go for are probably 61.8 to 78.6. But the overlords doing swing trading will probably be looking for new highs. And that's just above a record high of 707 at 710. But for the purposes of what we're doing at the moment, we'll just leave that like that. You can put your Fibonacci tool for higher and higher. Well, you know my targets for the year. It's between 4,000 and 4,001. But for the time being, for this session, that's what we're looking at. Take that off. So that's where we are at the moment. And what can we do? What strategies can we actually use for this? Well, one of the strategies we can use is we've got rejection into some support and resistance here, this confluence here, and people will be buying into this for two reasons. One, it's gone into an area where it's been into before, and it's been multiple times it's been bought and broke out of, very important, broke out of. Just a heads up, and to give you a little bit of interest. Again, do the thing, and we'll get everyone in the room rolling their eyes, because I'm going to do this again, and I'll keep doing it until everyone gets it, is when the markets move up and move into a consolidation phase, 9 times out of 10, they will leave the consolidation phase in the way it started. In other words, on this one, to the top side. So a breakout of that consolidation box was absolutely key, yes, over the last few days. So just remember that one as well. I know I keep on going on about these every morning, but we're done every day, but it's absolutely key to understand this as a trader. Not strategies, it's reading the market, reading the candles, and understanding impulsive moves. So when we're looking at impulsive moves, let's look at where the impulsive move is at the moment. So we're at 4 hours, so we can go into the average true range in 4 hours, and you can see here a 28 pip move. We looked at the drop here, and this target should now be probably hit. Oh, there we are. Yeah, all the targets have been hit. Turn the trades on. We've hit all our profits. So well done to everyone who traded the market this morning. There's no trades on now. We've smacked full target profit. So that's really, really nice. So 28 pips. We did an 18 pip move. We wanted an impulsive move to some support and resistance, and we're going to get that into that at the moment. So impulsive moves, 28, on balance volume is moving up. Look at this. What you want to be reading things like this. This is more people on average, the average true range at 4 hours. You can see we've got the market. People are buying in and buying in. The average true range, the volatility is getting higher, and that's confirmed by our volatility indicator, the OBV9. Volume on base, on balance, is increasing. The participants are increasing also. So not only is the volume size getting bigger, there's more participants as well in the market. So there's only one direction this market is going to go, and that's up. Right, so we could have bought off here with a stop under the swing low here. That's one of the things we could have done, but generally we don't do 4-hour trades as a day trader. We look and get into the details. So now we've got our support and resistance here. We can get into 1-hour detail and drill down. So we're now drilling down into the markets. And this is what I do every morning before we open at 10 to 8. So I'm now looking at what do I want to do. So I'm looking at some resistances here, and I will be looking at, this is a spike. So that's marked as a spike anywhere. But here we've got our 3,700. We call a big round number. Markets often reject. And as you know, we traded the BRN this week into here. We had a target of 3699, hit right on the nose and come straight off. So we had a little push up here. So we're going to have that push up here. This is the spike. We've registered that spike with the top of the spike and the top of the actual cash trade. So what we're going to do, and that was a 3 o'clock news as well, actually, but we're going to put this down here, catch 3 pins or so here. That's when the 1-hour resistance starts coming into play. Let's go down to the downside. And at the moment, on the morning, we didn't know that was there. That was there. So, but we know it is there now, so we can't include that in our analyses. But if we look at where we would have looked here, let's just take that to one side so we can't see it. So this is an interesting pin, and this is why I put my swing lows under here, as you know from this morning. We're going to click that in, and we're going to look for a few, at least 3 pins, 1, 2, and then we have got 3 here. So that's our resistance level. So on a 1 hour trade, we want to have stops under this resistance level here. We know the market could easily come down into here. And we've marked the Fibos. So let's pull this market across now, and we can see we didn't quite come down to here, but this brings in something else that we use every single day, which is our EMAs, our 200 EMAs, that, you know, those things we hold to be true. One of them is that we always use the 200 1 hour and the 200 4 hour EMA. The market came down. Not only did it reject the 4 hour 78.6 Fibo, it bounced off the 200 EMA into this confluence. So it didn't quite make that here. So this morning, our trade from here with a stop under the swing low was a really good call to have. And our trade was going into the resistances here, which would be the easy, impulsive move. So now we've done this, we can then look at 1 hour moves. So 1 hour moves, do we want to use that 1 hour move? Not really, because that's the Federal Reserve interest rate decision. And it just so happens that all this noise here is the market, the Asian market responding to the American interest rate. So a bit choppy, messy action. So normally what I would have done if this wasn't a Fed day, we would have took a Fibonacci retrace from here to here to look at where our trades would end up, and end up somewhere between 61 and 78. But if you look at this peak here, that's absolutely key. So I wouldn't use a Fibonacci because of the new, because it's a 1 month event. So just so happens it's got a bit messed up with what we're doing. So we now can use a couple of things on the 1 hour. One of them we can use a soft resistance, which is there. That is the first resistance after the server switch over here last night. Market impulsively moved back up and then just fell away. So that's a resistance that we need to be aware of if we're going to do a trade, because the market is going to push to that resistance and potentially just punch back through before relaxing back. Now, we can also start to build in some more information. And the more information is, you can see that resistance there. We can use that resistance here and just put in the tertiary resistance here. So this market's got a high here to push through, but you can see these down pins here and here are going to be providing a wee bit of resistance. So drop down into the 1 hour view like this, and we can just check where this market moved. So we've got a 13 pip move. So is the ATR, what is the size of that bar? The size of that bar is 8.7. We've got 25 minutes. We've got 25 minutes to go. Let's check what that bar was. It's a fully finished one, 11.8. So the move could be 13. With impulse, the last impulsive move was 13.8. So it's not beyond the wit of man for the target that we did set and go in there. Did I put that on the Slack room? And that was yes. No, I just put buy in now, so never mind. Right, but we did this one live. So we're in 1 hour. We've got in 1 hour support resistance. We've got an impulsive move here, spike on the news, so we can put a bit of resistance in there. 1, 2, 3. So we've got a bit of quite a bit of challenge on this market to get up towards 3,700 again. We've got this area to peak and break through. We've got a number of tertiary and secondary resistance as well. So people will be taking profits just like we did into here. and we took profits at this. I'm just looking at the history. Profits were clocked out at 3670.1, 3670.1, 3670. So we took profits here right before that resistance. So we're now looking at where we can actually, we've got the retraces. We want a rich picture. What's our rich picture going to do? While we are walking down, when we've got lower highs and lower lows, using an expansion tool is not particularly accurate because the market is coming downhill. And at the moment, we have absolutely no guarantee whatsoever that this market is not moving in an impulsive way to the downside. I don't think it is, but we don't know that for sure. Until we break this level here, clearly, then we are breaking structure. So these are fractals as well. So you put the fractal tool on, it'll show you the fracts. So you can see that there's a fractal here, fractal here, fractal here. If we break a fractal breakout and structural breakout, then you know you're on your way. Absolutely know you're on your way. Where's my tool again? Where we've done it. And that's it there. So we'll turn the tools off. So that there so we can't do an expansion. All we can do is a retrace, and the retrace that we've got is a 4-hour retrace. So we know that that target's probably the next target to go for, having hit this resistance here. So we're going to drop from 1 hour now down into 15 minutes, which gives us a whole host of other strategies to look at as well. So the strategy that we employed this morning here was that 15-minute bar here. A break of that 15-minute bar here with a stop under the swing low here, taking us into this target here, which should have been 63.68, but we took it up to 63.70, right into the top there. So that was identified as a 15-minute bar break. And it's a 15-minute bar break and very relevant for a few reasons. There's support down here that got rejected. There is higher term support here on the 78.6 at 4 hour. You can see that pin, that mass when the pin come down here, massive rejection wick, indicating that people are closing out the bear positions, the selling positions there. That's the first time you can see people are actually selling off. Now, the market came down, didn't quite collect the 1 hour resistance. It did hit a 36.42. This is where all this rich picture, this information starts being very valuable to you. And then we produced a flat bottom. In other words, the market immediately accepted this as being the low for the duration of that 15-minute candle. So it was completely accepted. The market then traded above the 9 EMA. Perfect. And that's where we got in this morning and traded that. At 15 minutes, the impulsive moves could be anything from what at the moment it's 5. It could have been anything. We wanted 18, and the move there was on the spike would have been 16, 17, and that was quite nice. We did the trade. It's 10:39 now, so it took us 2 hours roughly to hit full whack, full target, which was very nice indeed. So nice 15-minute bar, that's what you actually can do. So we're still working with Fibonacci's on the 4-hour time frame because we still haven't developed anything from a Fibo point of view that gives us a possible expansion, because we don't know this is not going to stop. If this does stop, give us a little bit of resistance into here. We get some guys selling and taking profits into here. You can see that wick there is indication of profit taking. And I'll just quickly drop down to 1 minute to show you that. There, you can see there, as the market went up, it hit an effective ceiling. And that was that previous resistance that we identified here. Bang, people taking profits, people try to push up again, more profit taking, and try to push up again. And I rather suspect that the bulls will fail because the bulls are taking profits. They're seeing this not moving up, and you'll see this resistance. So this is just a matter of time thing, which is the key for a day trader, being patient. So if we go into, let's keep this 15 minutes just for this minute time frame. So at 15 minutes, we've done our trade, we've made our money, that's it, done. However, we want to continue trading. We know the next area is a 61.8 at the 4 hour. And if you look at 61.8, quite important that we can put some, we've got some 15-minute consolidation area, 15-minute consolidation. We can then put our little warning bar in here as well to say, look, at this 61.8 here, as well as people going for a profit taking, you can see roughly here, we've got a bit of resistance here that goes back to Monday. So these are all our little watch outs as a day trader. So we're doing all this. We did the first trade. We can continue on with the analysis. We haven't got a pullback to do a Fibonacci expansion for impulsive moves on 15 minutes. We just don't have that pullback yet. Oh, sorry, people are sending me flipping messages while we're live. Get off. Right. So there we are.
Steve, can I just do a little recap? Sorry, just
sure.
so just to make sure I'm following track. So obviously you're laying your levels out, etc. in the morning, your 4 hour, your 1 hour. You've done your retraces on the 4 hour and the expansion. I think because I can see 2 levels of 61.8, you know, several levels. The top 2 are that you've marked as expansion. You've based that on I lost where you got that expansion because you've got 61.8 retrace, which I fully got, and the 71, 78.6. And then you've got the expansion levels. That was from your trading tool, and you changed something in your writing. So I just lost that a little bit as my levels.
That's 78.6. I've typed it in. I forgot to change it. 161.8, 178.6. It said 61.8 twice.
Okay. And you used your expansion tool on the 4 hour to get those levels as well as the 4 hour retrace.
Absolutely, yes. So yeah.
Okay.
That's it, exactly.
Okay. And then just going at where you took your trade this morning, so you based that on basically you went down to the 78-point retrace and then you just waited for the reversal of you just said rather than there because that's fine. Okay, that's fine.
Ideally, we would have seen that come down into here. That would be the perfect storm. The actual perfect storm would be for the market to come down to this level where it has done previously before into here. And then we'd want to see it completely stretched on the stotch when it's into this level, and then the market to move off. But because we've got, when we understand there's a Fibonacci level here that the Fibo boys will be using to take profit into, the market actually stopped around this area. And it just so happens overcooked. So our story for going long is we've bounced off a 78.6, didn't quite meet that, but there again, the market didn't quite meet it before either here. And we're completely overcooked on the stotch, and the price action is now trading positively above the 9 EMA.
Yeah. And then the ATR that you used, you took that because you're trading off a 15-minute time frame. You used the 15-minute ATR rather than a higher time frame ATR. So wherever you're entering, whatever level you're entering.
I didn't. No, I used the 1 hour. So if we're trading on 15 minutes, it's very rare you get the the trade just to run in that 15 minutes and win. So if we're doing 15 minutes, then you want to use roughly about an hour. If you're trading on 1 hour, then you want to look at the 4 hour.
I see. Okay. Yeah.
Okay.
Yeah.
Sure. No problem at all. So what we're looking for is a retrace for 15 minutes to build. We know the next level is a 4-hour level up here that we want to attack. If we want to attack this, there's a few ways we can attack it. We can use a 15-minute fractal. So we could use a fracker. If we show the fracker, you can see here there is a fractal. If this candle comes in lower than this candle, then we will form a fractal break here. That will form a fractal break here. In 13 minutes, you'll see if this candle doesn't go higher than this and people are taking profits, the market moves down, you'll see a fractal break here. Now, you could take a 15-minute fractal off that. I'm not so keen on that because it is right in the resistance point. I prefer to take a fractal above this or well below it to burst through, not right into the resistance. But that's just a personal choice, just a personal choice. So we're in 15 minutes now. We can't look at an impulsive move. If you are going to take an impulsive move, in 13 minutes time, if this does not produce a new higher high, then you've got a fractal point here with a stop of about 20 pips. And can you fit 20 pips in before the market gets to its next key levels? Well, you've got 8 or so to the next expansion, but to the 78.6, you do have the opportunity to go to the next Fibonacci before you get to the big round number and the daily resistance here. So even at that level here, they have the opportunity for a breakout trade. But we can't use any of our tools at the moment to do the actual trade because everything's just in play. So what can we see here? We can see we've got tertiary and soft resistance coming in here, which culminates in an indecision candle here as well on the 15 minutes. Let's drop into 5 minutes, which can be 5-minute bar, 5-minute frackers. So let's go down into 5 minutes now. Where's my 5 minutes gone? Oh, there we are. 5 minutes. So we can see this picture quite nicely now as it's developed. The market's been up here before. It's come up again. It looks like we've got some rejection pins here. Well, you can see the rejection pins, bang, bang, bang. And now that is a fractal here. I'll turn the fractal on. I'll show you the fractal there. So there is the fractal. You can see the fractal moves up here. And there's another fractal forming with a fractal base that will set up there. In 1 minute, 20 seconds, you will see it draw. It's already drawn here. You could decide if you're very aggressive on gold to then take a fracker break, a 5-minute fracker break. You've already confirmed it with a 15-minute bar. That's our combination trade. We've already confirmed that it is a breakout. So you could use a fractal break here and your stop would be at 4.2, spreads 0.5 at the moment. It's usually 0.3 to 0.5. So it's 0.5 at the moment. So you'd need 5 pips. You'd need 5 pips, stop under the swing low there, and 5 pips to the next expansion area, which is 61.8. So that's easily done. You could hit a cheeky 1% there. So long as that fractal structure is not broken, you are good to go with a 5-minute fracker. We've broken the hard area here. There's a hard area here. I'll bring it across so you can see. There. We have broken that and we're into the secondary, tertiary soft tissue where people have tried to push and have now started taking profits, and now be manifest itself more clearly down into the 1 minute there. It's just resisting and resisting. So, but on 5 minutes, you can now have a look at testing the or checking if these are Fibonacci scalping moves. You know, I will get rid of a lot of this at the end. This is just what I do in the morning, or what everyone should be doing as a day trade in the morning, checking what all the levels and everything, but then taking everything off that is a bit of noise to make so you got clarity for your trading. So we'll use a Fibonacci expansion tool. and just check if this was an impulsive move. So we can go from the top there to the bottom there, and we can check that that was a Fibo move. You can see we come out at 367 or, and the potential target for the Fibo boys was between the 78 and 61.8. So you can see that that was an impulsive move target. So we can now expect the market to retrace. What can we do to guess where the market might retrace? We can look at the previous impulse pullback and measure that, which was 6 pips. So we can go across here, bring this down to roughly 6 pips. You'll be surprised at just how accurate these can be. So you've now found out why things have done, the whole story. There's a Fibonacci there. There is a Fibonacci expansion target there at the low level. We know there's a level here on the 1 hour and 15 minute, which is hard. We know on the 1 hour and 4 hour, there's soft tissue there. So the market's pushed into there. We kind of can see now with this impulsive move that it's not beyond the wit of man for this market to pull back 6 pips, because that would be the natural breather. The market's breathing. The market, as you see, the market's moving phase waves before they move off, and that would be absolutely normal. So do I want to? So I've now got the retrace isn't the 4 hour here, retrace isn't the 4 hour here. Do I need this one was used this morning for a pullback? Do we need that? No, we don't really need that anymore, because we've got all our money. If the market comes all the way back down to here, this is not going to be a 4 hour 78.6 retrace, because more price actions actually happened. You can see how important the retrace was here. Markets always react around Fibos. Sometimes people don't really read Fibos correctly, and that can add to you as a trader, knowing that people will see pullbacks and think that 61.8 Fibo is still relevant. It really isn't, but it's important because people do think it's important. That is not a 61. This is not a 61.8. That was a 61.8 here pullback, which bounced, and then it broke through and come down to 78.6. But it's important because people think it's important, but people really don't understand Fibos to the great extent. So, we can get rid of that now, because we can see it's an important point. We can get rid of that now because it's not really relevant. But what is relevant here is when the last impulsive stop. So what we can do is we can get rid of this soft tissue now, because we don't need that. We used that before, and we can use a lighter indication here that actually we can collect all this up and say, well, the market might come back and retest this area. We're right in the muck and bullets of everything. We're right in the muck and bullets of 5-minute action, but 5-minute action is 5-minute bars, 5-minute frackers, and small, precise profit-making moves potentially. We're looking at here, we're looking at an impulsive move. We've got an order of 3, so we've got 5 there, order of 3 or more, 15 minutes. So we're looking at impulsive moves, potentially 7 to 4. Would this market, what's this market 7 to 4? Well, we hardly think that this is going to come all the way down to here, but it could. The market's got a wiggle on. We expect the market not to break that line. We do not expect the market to break that line. So we sat here now thinking, well, what do we do? Do we want to continue trading? We've now got a new line here. We can see that fractal was not broken. That fractal was not broken. So the market's quite happy at that fractal structure impulse. So what was that impulse? We know what the impulse is. What was the impulse at 5 minutes? Each candle was we'll double check that, roughly 2. What size candle is that? 2. What size candle is that? 2. So it is reacting as expected. So we won't take the first fractal. Shall we take the first fractal break? It is on 5 minutes. Could we take that first fractal break? Some of the other things you want to watch out for here. We're trading above the 9 EMA. It's not being broken. We haven't broken the fractal reversal. That's strong. Then the EMAs from 1 day down to 5 minutes, the force is with you. The only thing that is not is that we're overcooked on the stotch. But if the impulsive buy, on balance, the buys are going up, but people are not really participating, that will culminate in small squat candles. So there's really no evidence yet, really, for a really good breakout. I think looking at this, we're right into this 1 hour and 15 minute and 1 hour and 4 hour soft tissue. I think I'd want to see the market braving it through to here on that point there, which is that fractal there. I would want to see a breakout here with a stop into that swing low here. We've got a one-to-one risk reward there to actually move. If this is an impulsive move, and if that is the bottom, we can use a fracker here. So we'll use an expansion tool, not a fracker, an expansion tool on the 5 minute. So we can actually look all the way down here, come down to here. We're doing all this all the time just to check. Where's my 61% Fibo? Look at that, right clustering, right near that other 61% Fibo. So my next target has got to be here, hasn't it? My next target is going to be into here. If that fractal holds, then the 5 minute expansion will be in here. So how long will that take to get there if this does break? Well, let's go to the 1 hour and check what's generally been happening. We're looking at what, 10 to 19 pip move. 10 to 19 pip move. How much do we have to move from there? Well within the normal trading cycle within 1 hour. So we now know that if this breaks out, the general impulsive move in 1 hour is going to be our target's 8, somewhere between 11. At the moment, it's 13. So we can easily trade that on a 5 minute frac. I wouldn't use that one. I would use this one to be more confident. So top to bottom here is 3.5. Spread is still, spread's come down now to 3. It was 5 before. So we could add half a pip under there for surety to 4 and a direct break of this second fractal. So we could say 4 and 4 as an impulsive move, but we know it's going to move more than 4. We know that from our expansive analysis. So we could say, do you know what? We're going to move, we're going to risk 4 for 8. Could put a 2% on that or whatever 1% you want to trade. And we're going to just get that breakout here. So you can put your alert up here under where the impulsive move might go from here to here. Or you can just take a one-to-one risk reward trade from there to here. So there's a 2%, a 1 to 2, or a 1 to 1. You could even put a 1 to 1 here. Now, if you want to do the rabbit in the headlights, 1 hour and 20-second trading for scalping, then you can. But down to 5 minutes, we've chosen a 5 minute fracker. You could do a 5 minute bar. Example of a 5 minute bar would be, this is a great 5 minute bar. That's a good 5 minute bar also. A fantastic 5 minute bar, if you're doing 5 minute bar trading, would be a 5 minute bar with the market actually closing above the 9 EMA. Bonus there, it's punched the 200 EMA on the 5 minutes as well. So a direct break of that under the swing low would be a 5 minute bar. That's what you call it. That's a perfect storm. And the stop goes under here because this is a lower low than this. So that would be a 5-minute bar, and that would have worked straight away. That's hindsight trading, but that is a way, by way of an example. Would I have ever took that? Absolutely not, because we were in a trade anyway to go up to there. But that's by way of an example what a good 5-minute bar would look like. This is a good 5-minute bar. That is a 5-minute bar that you wouldn't take. You wouldn't take a 5-minute bar when the wick is equidistant to the body of the candle, or when you have a wick to the top and the bottom. That's a Fibonacci indecision candle. This is a flat bottomed candle, and that would be a great candle to actually take. So taking the helicopter view now back out to the view, or the landscape as we're going to call it. Terry's named the landscape, so we'll use a landscape. So we now got this picture of, well, you know, whether swing traders and the big boys are, you know, the sloth traders are trading here, swing trading. They'll probably be waiting for 61.8 Fibos and probably won't get a trade. I'm just kind of turn all this off a minute, hide everything. Made a lot of noise in there, haven't we? So what I would probably do here now, before I this is all the stuff I'd kind of do before we open up in the morning. I'd think, fine, I'm not going to have a look at that, because if the market does come down, I'll have another look. I'll just leave that on because I want to see where the retraces are, and I'll drill into the 4 hour. What we're doing now is cleaning up the act. I'll leave that down there, that's fine. 4 hour, yeah, I want to see that. And there's the 1 hour, that's okay. Have I got any noise down here that I won't use again today? Because we're overcooked here. The only way is up. Barring news, of course. And then we're now into the 1 hour, and we can see our 4 hour level, our 1 hour level, our lighter level. It might not come across on the screen that much, but you can easily cool it down a little bit. So if it's a lighter level, and you know it is based around a support level, but lower level than the 1 hour. It's I think that was a 15-minute. We can see our 1 hour levels here, just above the 61.8, which is a watch out area. So we're trading. We want to put an alert into there just to put that in. These are the things you'll see in the morning when I put that in. Drill down into the 15-minute. What else do I want to leave on here to show people? Well, I might leave that on in the morning to show people what happened if all this trading happened between sort of when I trade up until 8 o'clock. And if I didn't post it, then I would just take all that off so it's all clean, and identify where the next fractal break would be. Don't want anything else, not really interested in anything else here, unless we start to get a Fibonacci, if we get a retrace and a break in the green candles. In other words, it'd have to be 2, not just 1, 2 to show a change. I would then recalculate using a lower time frame of where my expansion things might be, then drill right down into the 5 minutes where we can use fractals, 15-minute bars, etc. And at the moment we've spotted that fractal there, which you'll put it on. There's your fracker, and then I would probably post that in the room as a fractal break opportunity, and I would more than likely just take that off. People say, well, what's that ellipse for? So, and I would look for that breakout there, and that would be our target that we'd be going for. I've just got rid of the limit there, haven't I? Better put the limit back on. The profit limit. Well, where do we have that? We had that at 4. We had that at 8, didn't we? Set it at 8. So, well, that's a real trade. So we'll do it. We will do that at 8, which is right on the 61.8 expansion. If you remember, it's a 5-minute expansion too as well. So that's a highly probable trade. So long as this fractal structure holds there, then that will be a decent trade to be had. So flipping heck, how long have I been on? Hour and a half. So hopefully that made sense. Looking at 1 hour, looking at impulsive moves. Sorry, looking at 1 day, impulsive moves, retraces, expansions, 4 hour ATR, impulse moves, support, resistance, and expansion. Again, down into the 1 hour, rolling into the 15-minute where we trade, and rolling down into the 5-minute where we can trade and scalp for small moves. Hopefully that made sense. Any questions on that? It's all recorded, so you can go back and rinse and repeat. But yeah, any questions from anyone in the room?
No, that was really helpful. Thank you.
Yeah, it's fantastic. Thanks, Steve.
Yeah.
Okay.
So Steve, how often do you find you're doing it from a blank chart? Do you do it daily from a blank chart, or do you tend to just keep building the story around what you've got that you just showed us?
Well, that's a really good question. I build a story. I certainly build a story, always build a story. So let's, for instance, go back to gold, FTSE that we're trading this morning. So let's go back to the FTSE we're trading this morning. So we traded this, we traded the close and then up into the target of 93, 92.35. We put the puts in and then we put this retrace in. So this is a story build. You can see it's a story build for the simple reason we've had breakouts, and this is where something, as you would say, something we prepared earlier. I did this this morning of where the market would probably stop, and it hit right where we said it would hit, and it reversed in the way we said it would reverse, and now we're into the money. So short answer is yes, I build a story that, you can see the builds and the highs. You get the silvers, you get the 1 hour, 1 day, 4 hour, 4 hour, 4 hour. So I can very quickly, just by the color coordination, quickly identify where moves might happen. So yeah, I build a storyboard and build onto it every day. Just keep adding and just keep adding and just keep adding to the story. So yeah, that's exactly what I do. Wow, the gold futures markets are absolutely smashing it, aren't they? If you took the December futures contracts, we're well up there, and the gold futures at 3,700 Decembers, they are really good selling the puts on that. FTSE with futures market on that, we're smashing that as well. Really good. So yeah, sorry, this is a teaching session, not a trading session. So yeah, I do build a story on everything. I haven't really touched yet the US 500 chart this morning. So here we are. This is what I wanted to do. All right, these are the targets I set. Futures market all breakout, which was 66.39, which blew straight through in the futures market this morning. And what I'm looking for is the market to drop down below Camarilla breakout long, back down to the identification of where I think the market will be really bought up heavily. And you can see here that the close is right down into there. The Dow have not touched the Dow today. So that'll be the markup from yesterday, new all-time record highs with the Dow. And you can see where the markup was, and you can see the push downs through it. So I now need to have a look at my cam levels, your pivot levels, readjust all those. So yeah, that's a long answer to a short question. Yeah, answer is you just keep building and building, because every morning you wake up, you come to the screen, you find out where the levels were. I did reactions or not. Right, the robots have come in now. So two of the robots have come in and started to trade. These are the 5-minute frackers. So they're in and getting in getting in aggressively. But our manual trade is still set for there. So our manual trade is set for there, but we broke the fractal. So we've broken that fractal. So the rule is take them off. We're looking for new structure. So from a manual trading point of view, we expect the market to not break this bar. If we've got, the new, simple harmonic motion, it's like the wave, we've got waves going up or phases, pulling back, waves going up, coming back. We do expect around this level, give or take a pip or two, the market to be impulsively bought. And if it is, then I would now say that is the new fractal with whatever the base might be here. So you've got to be dynamic in what you're going to do, where you think things are going to go, and where we thought things were going to go there based on the 5-minute action has now changed. No matter what we do and how you think, no matter where you think the market's going to go, the market is always right. Even when you think it's wrong, it's always right. As long as you keep that in mind all the time, react to the market, trade what you see, use the tools you've got, and you will keep the right side of retaining profit, or best thing, just don't lose money. And we can keep this going for another minute or two to see if the market starts to buy here. And we can put that in the micro levels and have a little look at the unbalanced volume. People have been walking away and it's been negative, but let's see. You can see the unbalance indicator. It's starting to show volume coming through. There is the base we expect the market to impulsively move to without an issue, without having a problem. And you can see here we have a fractal setting up on the 1 minute. It will set the same on a 5 minute as well. So what we've got now is a new 5 minute fractal. So this is, you as a trader got to respond, be dynamic to the market. As a day trader, we've got that down here. New lows are here. So we've got a 61.8%. On the 5 minute, very close to the 15 minute, which was here, very close to the 4 hour, which is here. So we now have a cluster of 61.8s at multi-time frames. So long as the low holds, then that's still a target, but the bottom end of that now. So you're looking at the breakout of here, stops under that swing low, which 5.5, I'll probably ram that to 6, and the target into the bottom here of 7. So you could say 6 and 7 or 6 and 6 on that fractal. So long as the fractal holds, it hasn't put a new fractal in yet, but so long as its bottom holds, it will draw a new fractal. Okay. And again, it's the same thing. It's just watching, waiting, and responding to the market. Don't really need to trade anymore for the simple reason we've already made all the money trading. The morning sessions are waiting for gold to come in. Well, gold's already come in, waiting for the bots to come in. We're waiting for a new breakout here. We're short on USD Swiss, which is in the money. USD Japani, we're waiting on USD Japani. And then we're waiting for the afternoon sessions with the S&P 500, the Dow Gap, and the NASDAQ 15-minute break. Any more questions, guys?
No, that's been brilliant. Thank you.
Okie dokie. Well, I'll get off, and Thursday today. Tomorrow morning there's no live session because I'm away, but we will be on live at 10 o'clock for trading the FTSE expiry. So if you've never witnessed a FTSE expiry before, this is a triple witching expiry. So expect a big move, nice adrenaline rush, and hopefully a cheeky 1 to 2% trade within 5 minutes. And if you don't know the strategy, go back into the Learning Center, pull the PDF out, watch the video, have a look. we'll go over it at 10 o'clock, ready for the 10 past 10 trade, and we'll do that live together. All right, guys. See you all.
Thank
see all
you.
tomorrow.
Bye.
Thanks a lot.
All right,
Thank you.
bye-bye.
Thank you,
Bye.
Steve. Thanks,
No
Steve.
problem.
Bye.
Bye, guys.